Hey traders, Parker here with an explanation behind my indicator, the relative volume standard deviation indicator. This indicator is actually based off another indicator. I'm just going to bring the indicator on. And this is the relative volume standard deviation that Thinkorswim gives you. These labels right here correspond with the coloring of the bars, and these are the explanations behind it. So volumes above 2 deviations, you'll get a white bar, and if it's to the bullish side, you'll get a yellow bar. If it's to the bearish side, volume above 2 deviations. Volume above 1 deviation, you get the bright green or bright red. Volume above average, and a volume above average bull or bear. Volume volume below average bull and bear. So that's this is the key for the labels. For these labels are the key. These labels and their colors are the key to the coloring of the bars and tell you what's going on. And this, if you go to the actual indicator, this one on Thinkorswim, it gives you explanation behind everything. So this is actually a support and resistance indicator or supply and demand indicator developed by Melvin Dickover. Yeah. So if you go through this, you'll see where they have the DPLs or pools are marked by defended price lines. And you want to use the previous close of that candle or the candle where you see volume above 2 deviations as somewhat emphasis on support and resistance or supply and demand. This is just goes to this explanation of it. Just pull it up and you can read about it. I'm not going to go to a whole lot of emphasis on it, but that's what this indicator is based off of. And I also found an article online here. So if you just Google the person Melvin Dickover, here's another explanation for how the for understanding market movements by Melvin Dickover, and his model, his evidence, everything that you want to know about the his reason for the indicator. So you can go in there. Here's the actual Thinkorswim. So this yellow bar is above. This is it only gives you 2 colors for this. So if any bars are above two deviations, they'll be yellow. Anything below 2 deviations will be pink. And that's where you can see where these things correspond. All 3 of these bars above 1 deviation, and that's why they're bright green. You can see this one to the bullish side. So there's really no direction in this indicator, and that's one of the reasons why I colored these bars, these volume bars, to give you some sense of direction, and you can see where things where buying was. So I'm gonna get rid of Thinkorswim's version of it, and I present mine. And this is the actual indicator. And you can see if you want to use this volume above 2 standard deviations, if you want to look at it as support and resistance or supply and demand indicator, you can see right here where this one right here, this first bar, or it would be a DPL, a defended price level, if I'm remembering correctly, defended price line or defended price levels. And just anyway, there you draw a horizontal line. You just read into that. I said I wasn't gonna go into it, but for the most part, we drew a horizontal line like he's emphasizing from here. You can see where price came back to where buyers were. And if I'm just going to change this. And if I were to duplicate this and move this over here to this close right here, you can see where this kind of acted as a area for buyers to come into, but you still had to come back above this area. You were able to breach above it. But that's basically what he's talking about. And we duplicate it and make it this one. When you're going to go to the closing price, but it seems like it actually works better if on those selling candles, if you just go to the opening of those selling candles, and use those as the defended areas for buying and selling. So if I duplicate that one and bring it forward to this one right here, and this would be the greater one for those if you're using 2 standard deviations. So that's basically how he would use it, or is explaining how to use this. But for the most part, I use it for buying and selling. For the most part, if I get one of these at the open, I look for a close breaking above this high right here, and I would probably get in right here if I see it going to the bullet side. But for the most part, these are all low volume candles, except for this one right here. You could say this is above average, but you can see the price really didn't go anywhere. But you can see, but the prevailing trend is pushing it back down, and you can say right here, this is all consolidation. And if you wanted to, you can actually draw a box around this consolidation right here. So if you wanted to go to the lowest low for that consolidation, you could just see it, but that was a breach right there. And so I'm just going to remove that box. But that would be the breach point. You can see right here where this worked out really nicely, especially if you're just using the candles that are above 2 deviations. But this is the reason behind the indicator. And one of the other reasons why I created this indicator is because I was trying to figure out a way to track volume average. How do you really consider when a candle is above average, extremely above average volume, or extremely below average volume? So one of the other features of this indicator is highest volume. So this gives you the highest volume on average. And that's what these gray lines are. Let me actually, I have them grayed, but you can make them whatever color you want to. But to actually show you what they look like, let's just make that one orange. So this purple line right here represents the highest volume on this chart on average of these 12 bars. I have mine set to 12 bars on a 5-minute chart gives you an hour. So that's one of the reasons why I use 12, because I want to know what's going on an hourly basis. Same situation with these the time reminders. I care about what part of the day is if I'm trading. You can see after the first hour of the day, everything just started ranging. And then this is the second hour, it's still ranging, but it's starting to break down. And you can see how there's no volume really in this area up until this period right here. You can say this one right here, but for the most part, there's no volume. It's just dead until you come into this power hour. Yeah, you had this happen. I'm not sure. I didn't check the news about why this happened. This huge bar right here happened. But it happened at 1:15. But it actually, this actually started at about 1 o'clock. So we actually go to the news, go down to 1 o'clock, and we find Fed minutes. So it was Fed speak that actually broke the market down, came to this support area from this big volume bar right here, and it pushed back above. But it pushed back above on a relatively low volume. Another feature of this indicator is the trend. Where is it? So my trend right now is close to close. You can choose Hikanashi. You can use the buy sell pressure. You can use the high low average of the candles if the high low average of the candles are pushing up, or you can use the average of the high low close divided by 3 average and see if the whatever that trend is. Regular stands for open and close. So it's just going to track the open and close. So if the close is above the open, then it'll if the close is above the open, then you get a green bar. If the open is above the close, then you get a red bar. Close to close is just tracking. If this close above the previous close, that close above the previous close, close, so on and so forth. That's how that one works, close to close. And it just tracks if this close is above the previous close. Right now, if you're looking at it from the point of view of open and close, then it's going to take the open of the candle and say if the open is above the close, then it's going to be a red candle. If the open is below the close, then it'll be a green candle or a positive candle. That's what regular stands for. So I'm going to change it back to close because I care about that trend. But I changed the Heikin-Ashi as well. And this is what Heikin-Ashi looks like. And if you're unfamiliar with Heikin-Ashi, go over here, and that's basically it right here. You can see all the filled in bars are green or of the bullish nature, and you can see all the empty bars of the bearish nature. And it's just a trend, and that's all you're doing is tracking trend within the candles. So that's one of the other features of this indicator. You can scan for bearish scan, bull scan, new high, volume, new highs within the volume, and whether it's bullish or bearish. You can paint the bars, not paint the bars. If you don't like volume, you can track it actually by tick as well. So, and you have a second period in this as well. So I'm using the day for my second period, and it's giving me, let me move this over. So it's giving me, excuse me. First off, there's an ATR period too, and it's based off the day, whatever time frame you had are looking for or looking at. And you have your period 2 volume is my daily volume on the day, and my volume average on the day. So I have it set for 21. And that's an average that a lot of traders use on a daily to track average of price, or I use it for tracking volume as well. So you get your average. So you can change this to whatever you want to change it to: week, month, day, quarter, and however you want to track that volume. Track the second period on volume. And here's your ATR labels. You can hide them or you can show them. Period 2 labels, and that's be 1, 2, these 3, 4 labels right here. If I change this to week, that label down is to change to week as well, and the ATR correspond to the week as well. So everything will correspond to a week, whatever time period that you choose on this indicator. I'm gonna change it back to a day. Simple. You can change the volume average type, but that's how this indicator works. I'm going to change this back. So I use this indicator to track volume. That's the biggest thing right there. You're tracking volume. And if you have this time reminders indicator, you can track the volume of the day. And that's basically how I do it when I'm getting ready to trade. I come in here at the 5th hour of the trading, and I'll look at what's going on, or come over here to where it says use your input, but for the most part for me 2 o'clock is power hour, the last hour of the day. But you can change this as well. But these are the labels for this indicator. I mean, not labels, but this is the key for the colors for the volume down here. I would use this indicator in conjunction with another indicator. One of the ones I use in conjunction with this one is the unbalanced volume indicator to track and see where volume is. And this is going from close to close. So if I go to unbalanced volume and we go into the actual code, it's tracking close. So if it's positive, it'll add volume. Whatever the range was between the closes, it'll add that amount of volume. If it's negative, then it'll subtract that amount of volume from that range between the closes. And this is just telling me, hey, volume or the direction of the volume. So the direction of the volume is there. This was a small pullback, and then you got this big push up as well. These arrows that are in here that I just add in for divergences, and you can look right here. Let's see. Price. My arrows are based off of momentum. And you could say momentum made a new high, but the indicator made a new low. So that'd be a bearish divergence. And you can see right here, price made a new low, but the indicator made a new high. So that'd be a bullish divergence right there. And that's where these, and this cloud right here is just an average cloud. And this red line is my momentum line. As long as the unbalanced volume is above this line, it's positive momentum. And these green dots just correspond to the average and the momentum line. You can see right here, the average is bullish. As long as the bright blue or this baby blue is bullish, this dark blue is bearish. And you can see right here where unbalanced moved below its momentum line, but the average was still bullish. So you got dark green. And when it came out, you got bright green. But you can see right here, all this moving around in the stock was not significant when it came to volume. And up until this point, you got a significant move down here. And then you got where price kind of settled for a moment. And then you got this consolidation right here. And then you got this push down below. And then you can see how the indicator just turned completely up and did a U-turn. And you can see how everything just worked out for you once the unbalanced volume went to positive. But you can also look right here, volume. These long low wicks right here just show you that buyers was coming in. Buyers were coming in, stepping into play to push the stock back above. Another indicator that I'm still working on is my signals indicator. If I push this one up right here, it's noisy, but for the most part, it's giving you almost play-by-play action. And we come back over here, we can see how everything really worked out. This is the different things are in this indicator, the signals indicator. Is the engulfing candles. You can see bullish engulfing, bearish engulfing, the red and green. And you can see, let's come back to the opening of the day. This line that popped out right here, this cyan line, let's zoom in. This bright blue, this baby blue line right here represents the previous high. So this line right here is showing you that, hey, this the close broke above the previous high, and it has greater volume than the previous candle. And you got a green arrow. So that's what you're gonna get if close breaks above the previous high on greater volume than the previous candle. You'll get this cyan line, and you'll get a green arrow to indicate it. If close breaks above the previous high, but the volume isn't greater than the previous candle, then you'll get this gray line to indicate, hey, this was the previous high of that candle. Same situation here, and you'll get the exact opposite on these other candles. If close breaks below the previous low, you'll get this magenta or this purple line right here. It's showing you the previous low of the previous candle. And you'll get a red arrow as well. So if you get a break below, you'll get a gray. I'm looking for a gray one, but here's one. So this one broke below the previous low. The close broke below the previous low, but it didn't have greater volume than the previous candle. So that's all that's indicating. So I care about the close breaking above the previous high. I don't care about the high breaking up above the previous high, because it doesn't really mean anything, because the highs and lows of the candles represents volatility, to me at least. I care about where the close price is in conjunction with the high and lows and with the highs and lows. and the close is breaking, making new lows, then hey, it's a bearish sign. But volume is not increasing, then it doesn't mean as much. I hope that was a great, better explanation. But the other things are in the signals indicator are the anomalies and the throttling. I call these blue squares and the yellow triangles different things before, but I'm finally settled on price throttling and anomalies. So this is based on the throttling and the anomalies are based off of my study of Ann Coolin and how she does things. But for the most part, this throttling is based off of range. So these two indicators are based off of ranges between whatever range, they're range specific. So right now I have them close to close. You have ATR range, you have the high low, or you can base off the open and close range. So if these ranges are below average, and volume is above average, you get these blue squares, and that just represents throttling. So if my range is below average and volume is above average, I mean I'm not getting a lot of movement. I'm getting a lot of volume, but the price is not able to move or go anywhere. If it's in the upper range of the trend, if it's in the upper range of the trend, then it's a bearish signal. That's how I take it. And you can see where price actually wasn't able to do anything, and you get a lot of this throttling. And you got this low volume right here and throttling. And you got an engulfing bar right here with these triangles right here. But it's actually a bearish engulfing bar. But for the most part, it's not going anywhere. Price isn't going anywhere. And you actually got this, so that's what the blue squares represents, a throttling. The yellow squares represents a below average range, but above average. I'll take that back. So the triangles represents above average range with low volume. So they're called anomalies. That Ann Coolin described them as tricks used by the insiders to push price above to trap people. And I'm showing this to you on a 5-minute chart, but they show a lot. They make more sense on the higher time frames, especially if price is moving up and volume is not moving up. Then you can almost look at it as being a trap for the insiders to sell the stock lower. But if you get in a range like this, it doesn't really mean too much. And that's what these yellow triangles, they're warning signs. Hey, price, there's a big range on this candle between the closes, but volume is below average. So it's actually a warning indicator. And you have these divergent dots. So you have the magenta and then you have the blue one. So the divergence dots represents divergence within price. Here I have a lower low, and a higher close and volume increase. So that's why you get this divergence dot right here. This is a bearish divergence dot right here. You have a higher high but a lower close and volume increase. You'll have these divergences happen throughout the stock, but I don't care about those unless volume increased. So volume increase, then yeah, I care about it. That means that they're significant. Other than that, they're insignificant to me. I care about volume increasing or volume increase or volume decreasing. So those are your divergence dots, and then you have the cloaks. I call them cloaks, but what they are buying and selling imbalances. So this is a bearish candle right here, but there's a buying imbalance on this candle right here. And that's why it's cloaked in green. And you can find red cloaks right here too. And the red cloaks, the buying and selling imbalances, and you got them right here as well. So I look at it like this: if the close is greater than half of the range between the high and low, then there's a buying imbalance, and almost certainly the candle will go up. I'm not saying it's always true, but more than likely there's bias in this area, and it'll push the candle and then push price up. Same situation here. If close is below half the range of the high and low, then there's selling imbalance right there, and more than likely price is going to go down, and that's exactly what you got in this example right here. But you can find them throughout, and you can see right here there's a buying imbalance on this candle, even though you have these other indicators, like you have throttling right here, close made and broke below the low on volume, but this is almost a hammer candle. If you shaved off this top, it's almost a hammer candle, but it's also could be seen as almost a doji or a spinning top as well. And you can see how price pushed back above because buyers came in, and it created an inside bar. So this bar is inside the range of this previous high and low, and all of these bars are. And what you would do is just look for a break above that, possibly getting in on this candle right here on the break above this inside range right here. So you have you have those everywhere you see an engulfing candle. That's what those triangles mean, and these yellow dots right here just shows you inside bars, and you can see right there that these bars are inside until you broke above right there. So I would use this indicator in conjunction with another indicator, the volume indicator in conjunction with another indicator. But I want to say that's all for the signals indicator. You can show the bubbles or not show the bubbles. There's a piercing cloud, piercing line in indicators in there as well. PCL just represents piercing line, and DCC just represents dark cloud cover. So I care about those. If you're unfamiliar with those, just look them up and they'll give you explanation behind it. These TBs represents tweezer bottoms, and you can see all these lows are the same, and these tweezer tops these highs are the same, and their tweezer tops are bearish, but for the most part this became bullish once this close broke above this those tweezer tops right there. You can see how those played a role in pushing the stock down as well, and these tweezer bottoms played a role in pushing the stock above. How almost buyers and sellers are putting in their defenses right here. The price wasn't able to push down below, but it was able to push up. So this is what else I want to say. I want to say those were the ones I wanted to go over. And I had someone ask about my relative highest volume or volume. This was actually called the highest volume comparison. This one just tracks volume according to the highest bar right here and judges all the volume bars by percentages. So if you look right here, this line right here represents 25%. This represents 50. This represents 75. So anything that's below 50 but above 25 would be light green or this pink color right here, or salmon. And anything above 50 will be bright green or bright red, and it just tracks the highest volume average. And anything that's above 75 will be white or yellow. So if you're interested in this indicator or you're interested in that, and anything below 25 would be dark green. But it just tracks volume, the highest volume average, and there's only one trend in that indicator. So that's pretty much it for this video. But I also wanted to show it to you on a higher time frame. If we take it up to a higher time frame, you can see more of those bubbles, especially when it comes to the SPY. I'm gonna change the averages on this to 21, and you can see the time reminders actually went away, and you actually got the months now. And I'll change this to 21 as well. My unbalanced volume, and it's just tracking. You can see right here, I think this is during the pandemic, how everything just completely sold off, and then we got our big push in March. Is that March? You can say April of 2020. Yeah, 20. And you can just see how price and volume was going, and it was just trending up. Here's your dark cloud cover, your piercing line color. Here's your little wedge down and your wedge up right here for those two. So we'll zoom in, and you can't really see the little wedge for that one, but for the most part, that's it right there. There's a wedge. And when you decide to, if you decide to get this indicator and you decide to go up above a daily chart to a weekly chart, so we just put on, the indicator goes away, because you can't necessarily have those two time periods in there. You have to change this to a time period either the same or higher. So I can change that one to a month, and the indicator comes up, and now I have monthly ATR, I have monthly volume, and monthly average, and you'll just change that. So if you want to look on a weekly or higher time frame than a day, then you need to change that second time period. So, and we'll change this back to daily, and I should have changed this one to 21 as well. And like I said, those bubbles might get in your way if you're using the signals indicator. Just cut them off. And now the bubbles won't get in your way. We can actually see what's going on today with the S&P 500. And you can almost look at this like a cup. And this will be the handle. And hopefully SPY continues to break out. And I think I have my fibs on the highest SPY. So yeah, the highest and the lowest for this last push up and push down. And the S&P 500 is above 50% of that, and this is your 61.8, and it's kind of headed towards this 78.6 fib. And this is what this indicator looks like on the daily. You can see these push downs for volume, greater and greater volume, pushing these down. But you can also see how volume started to dry up as well. And then you got this big push right here. And you can see how there's a gap. There's a gap here, and that's why this blue line right here is back towards this high right here. So SPY actually gapped up. And it actually broke above this gap right here. So there's a small gap right there. And you can see the direction of price and volume is up. It had a small pullback, and then you pushed up. And what else? Here's the key for this indicator, those colors. And I think that's it. If you don't like the colors I've chosen, you could come to here. Here's the same key that you got up there. Just change those colors. If you don't like anything that I've chosen, just change any of those colors. But that's basically the end of this video. And these indicators, look in the description. You can get these indicators. I wish you the best. I thank you again for taking the time out to listen to what I had to say. I hope what I said was valuable to you. Remember, I'm not a financial advisor. Nothing is guaranteed in the stock market, but these are some lessons I've learned and some of the things I've learned from reading books and listening to other people's strategies and different things. I wish you the best and God bless. And if you haven't already, please like and subscribe.